This is the MTPredictor weekly market update for May 11th. So it is Mother's Day here in the US, so a happy Mother's Day to all the mothers there around the world. I hope they all enjoy the day. So, I had a question about, are we in a bubble? And, I'm seeing, I was around in the tech bubble in 2000. I was working with Schwab at the time, and I don't see what we saw then now. This is a little different. We're seeing pockets. Obviously, this is a interest rate driven market in terms of the interest rates are low. We're seeing stocks grow, and even though it is artificially induced, but we're seeing pockets of froth, if you will. You've got companies that don't make any money. A lot of tech companies that don't make any money that are trading at very lofty levels. We saw, if you look at Tesla got has been getting hammered because people are just realizing the stocks, certain of these stocks are just not worth the prices that they're trading at. Now I will say Tesla has pulled back here. Just on a kind of a side note here, we're in some decision point support here. We had high volume come in here on the turn with a blue buyer's candle. So if they do take out 183.41, maybe they rally to fill the gap here. So that might be an interesting play. But anyway, this is kind of what we're seeing. It's that some of these lofty stocks, especially these ones that don't have earnings, are coming back to earth. And if we look at the bigger picture here, I'm going to look at the monthly chart of the S&P. Let's just kind of go through this. So we know this was a significant high here, and we take our decision point tool because this area should act as a major resistance level, just as if we go back here, we take a decision point, this acted as a major support level. Well, you can see we've pushed through this level, and you see the STF, our strong trend filter here, the oscillator is into the gray band at the top. And that was telling us back in October of last year that there was going to be more upside ahead, and we certainly have got that. And they've pulled, begun to pull away from the level here. That usually tells me that eventually we're going higher. We'll go down, drill down now to the weekly, because on the weekly chart, now we know that resistance level is here, so I'm just going to remove that for a second here. And let's just drill out a little bit further here. So we know we've got our 5-wave pattern up here. Whoops. Let's redo that with the intermediate, Elliott wave intermediate. So we know we hit this minimum wave 5 target. And you see the market again is just consolidating in this level. But here's our typical wave 5. There's 1900, nice round number in the S&P there, and the typical wave 5 right just slightly above that. We can take a decision point off of the wave 5 high here, and right in this area, right at 1900. We've got options expiration, that we're heading into options expiration week here. The tendency is about 70% of the time the market likes to rally into options expiration. So I would probably look for. We'll see if they can rally. We're fairly close to that 1900, and I think the possibility is that we rally into options expiration, get into the S&P into that 1900 level, and then maybe get some type of correction. It may only be a correction back into the chop area here. All right, we'll kind of wait and see and evaluate what transpires if we get up into that 1900 level. But that is an area where typically we would anticipate, we call it typical wave 5 because typically that's where wave 5 will end before we get a correction. And typically the correction will be back to the wave 4 decision point here. All right, if we do get a correction, back to this level, let's just go back to the monthly chart here. I just want to point this out. You can see on all the turns, all these bottoms on the monthly chart have all come on higher than normal volume. So you can see the volume really started to pick up as the bottom was being put in. Okay, even this little pullback here, now this is a monthly chart, so this doesn't look like much. It looks a lot worse on a daily chart, but even on this little pullback here, you see how the volume increased. We even had high volume spikes coming in here and here that told us there was unusual volume activity happening. So a really good heads up that a bottom was being put in. Here's this pullback here. You can see preceded by the very, very high volume that came in at the turn there. So, and you can see that the volume is just kind of tapers off as the market trends higher. So you can see here the high volume on the turn, and then the volume just kind of slowly comes off there and normalizes, and as the market moves higher. So that's kind of where we're in. We have strength on the STF to the upside. We talked about that, and we've exceeded the monthly resistance level. So if we do get a pullback, that's what we can look for, is that higher than normal volume, those volume spikes on a pullback, to give us an idea if the bottom is being put in, and that might be a good opportunity to buy. So we had a number of weeks ago, we had a Dow theory confirmation where the Dow Industrials confirmed the new highs in the Dow Transports. All right, doesn't mean that the market can't sell off. It's just telling the Dow theorists, that those that follow the Dow theory, that the bull market is intact. All right, so it would be a buying opportunity. Any corrections or sell-offs should be a buying opportunity, unless it violates, the rules for a bear market in Dow theory. So, looking for, see if we get that last pop. We may get selling early in the week. Maybe Monday we get maybe a down day, or some selling into some larger degree support on the shorter time frame, and then a rally into options expiration. A nice 1900, nice round number there would be, I think, pretty appetizing. A nice round strike price there in the ES. So we'll look for that, and then we'll see if we do reach that 1900. We'll see what things look like. Do we get a high volume spike coming in, telling us that maybe professionals are stepping in and selling at that point in the wave 5 target area? Some other things that was kicking around. I don't know if you heard that Warren Buffett had talked about the Fed as being the largest hedge fund, with this, trillions and trillions of assets that the Fed is carrying. Buffett referred to them as the largest hedge fund in the world, or in history, I think it was, and I don't think that was a compliment. I think right around that same time, Bernanke was heard in I don't know if it was a speech or a dinner or something that he was at, that there was 100%. He was 100% certain that we would not see high inflation or hyperinflation. 100% certain. That can kind of scare you when you think about it, because this is the same man that said before the real estate bubble and crash in 2008, that the country had never seen a real estate, a kind of a nationwide real estate sell-off, and that real estate prices only go up. And of course, he was expecting, if we did get any selling in real estate, it would be isolated in isolated areas. Well, of course, he was certainly proven to be wrong in that case. So when he says there is, he's 100% certain that there will be no hyperinflation or high inflation, and he pointed to Japan being, Japan has done a lot more quantitative easing than we have at this point, and they don't have, they've never had hyperinflation as a result. But anytime somebody says 100% certain, not even 1% uncertain, just 100% certain, that makes me a little nervous. So just food for thought, something to kick around, especially given Bernanke's track record, something to keep your eye on. And of course, if they do, if we do get into a position where we are continuing to print money like it's going out of style, the stock market can go to, the S&P can go to 5,000, but it won't matter. I mean, you think about Zimbabwe, where their stock market went through the roof, and it was, the stocks were skyrocketing, but it's because the currency was worthless, So this is kind of what we're seeing. Obviously, not to the extent that Zimbabwe, because we're not having hyperinflation here, but you can see obviously prices are inflated, and we're starting to see that in some of these tech stocks, that people are realizing, this stock doesn't make money, this company doesn't make money, yet it's trading at these lofty levels. So perhaps we should take a step back here. Anyway, let's look at so that's the S&P there. I had the Australian dollar, US dollar up because we were tracking this one. This one's just been very well behaved. This had a nice 5-wave pattern up here. We anticipate then, just like we're looking at the S&P, if we get in the typical wave 5, right, we should get a correction back to the wave 4 DP. All right, if that correction happens, which it did, we talk about if this area holds as support, then the trend which was up prior should continue up. If they take it out to the downside, which obviously they did here, we find wave 1, we go to the bottom of wave 1 here, we take a decision point because this becomes the new target. And so they took the wave 4 DP out, found the major support, and how did it unfold? In a nice orderly 5-wave pattern down. Alright, so that's why we were looking at this area to be a buyer of the Australian dollar, US dollar, anticipating, just like we were anticipating from wave 5 to get a correction back to the wave 4 DP. Wave 5 down, looking to correct back to the wave 4 DP. It's taken that out to the upside, and you can see a new pattern has developed. We're in wave 4. We had a blue buyer's candle in there telling us buyers are overcoming sellers in the wave 4 support area. So let's just project up wave 5 here. Let's go wave 5 up. And okay, so there's the minimum wave 5 target here and your typical wave 5 target. Now, because they took out the wave 4 DP, now we've got to go back to the top of wave 1. Here's wave 1. We go to the top of wave 1 and we take a decision point there. Because since they've taken this level out, the tendency is they want to wipe out this whole 5-wave pattern down now. Alright, so we would anticipate somewhere in here we're going to get some another maybe corrective move. We can take our wave 4 decision point already here. So if we reach into these levels, we're going to have some decision point resistance up here as well, right in between there. So right in this level we should anticipate, if you're long the Australian dollar, US dollar, this is the area you want to be taking profits in, or at least protecting your profit with some type of trailing stop. And then we would anticipate some type of corrective action. Typically it will happen, sell off down into this level. Again, if this area holds as support, then we expect this trend, which was up prior, to continue up and eventually work its way up into this level here. That's just the tendency. It doesn't mean it's going to happen. And if you're going to trade anything, obviously we talk about you take a small risk in exchange for a high reward. So yeah, we've got at least twice your initial risk. So if you were long there from 928, the target there let's say 945, 946 there, right at the minimum wave 5 target, would be a little better than twice your initial risk. So that would be acceptable. And again, if you hit that level, that you're looking at taking your profit or managing with some type of protecting profit, managing with some type of trailing stop. We use an ATR trailing stop if we see strength on our STF. If we look at the STF here, not seeing any strength. But if we get to the target here and this oscillator is into the gray band at the top, like it got here, then we would anticipate more upside ahead. But obviously we don't have that. We only want to check that when we get close to the target. So, all right, I need to move along. Let's look at silver here. Silver, again, continues to weaken up a little bit here. We're looking for wave 5 down here. Again, this is a pattern that's been developing over weeks. Let's go down wave 5 here. You can see the wave 4, so let's just finish off with the wave 5 down, because I'd like to see one last test of this. This is your minimum wave 5 target. So again, the same pattern. Here's your 5-wave pattern up into the highs in silver. So we anticipate a correction back to this wave 4 DP. Same pattern, different market, different time frame. All right, this is the level that we came into. Again, this is the level we watch closely, because if this area holds as support, then the trend which was up prior should continue up. You know, we're talking about this trend prior. If this area gives way to the downside, all right, then we would anticipate a much lower prices in silver, back all the way back down to the bottom of wave 1. We can take a DP off of here. All right, that puts silver down around $10. All right, so I'm only expecting this if we can get into this wave 5 level here. And we talked about the volume that we've got to watch, because we have gotten some higher volume coming in, and that's what we see on these turns, higher volume. All right, so far they haven't broken back above 20, but and we'll look at the daily chart here in a second. But it is a possibility now. So I'm looking to see if they can just finish this off, kind of wash out all the the buyers in here that were buying in here, kind of wash them out a bit one last time, and then maybe look to be a buyer down here on that 1750, 1760 level, depending on what the volume looks like and everything that. But let's look at the daily chart here. Daily chart. So in the daily chart, we had a nice 5-wave pattern down here, and so the reason why we're watching this is because this turn, you can see it is looking to turn here on higher volume, and that's where we look for potential bottoms in conjunction with the wave 5. So the tendency is that they want to correct back to the wave 4 DP, this level here. All right, they haven't been able to do it, haven't been able to get back above 20. All right, so if you happen to take this to the long side, let's just see what the risk reward is to that. Oh, this is not. I don't have my levels on correctly, so I gotta redo that after. All right, so just be aware, if you're short, we're looking for that one last move down, getting into that 1750, 1760 level, but just be cautious of the fact that, cognizant of the fact that we've got high volume coming in on a potential turn, and we could, rally back at any point up into this. This is the around 2050 level. All right, and again, if they take that out, then we go to the top of the wave 1 here. All right, and then we'd be looking at, if they take this out, then they're probably going to wipe this whole 5-wave pattern down around that 2260, 2250 level. And then finally, I just want to look at the US dollar, because obviously that will play a role here as well. If I can find my DX. So on the dollar index, all right, this is an interesting scenario here. So again, this is that major low that came in on the dollar. Again, that's where your Jim Rogers and a lot of those professionals were buying on the high volume spike that came in, indicating that professionals were buying here. Then it ran into the target here, which was major resistance. and the dollar has not been able to get through this level. It's tested it a few times, traded above it, but has gotten smacked back down inside the range. Now the dollar did finally come into some decision point support down here with a high volume spike. Blue buyer's candle indicating that this could be professionals stepping in and buying the dollar here. I know a lot of technical analysts will look at this sell-off here as it broke these prior lows, but this is where professionals like to trap those sellers in this level. So we'd have to take out the high. Just put some risk reward to this for a second. Let's just say a retest of that level, or maybe even take a decision point of this level. Let's see if there's about 1.7 R, so it's a little light. So maybe not a good trade, at least in terms of the weekly chart. But if they take the high out, 79.98, looks like was the high there. Yeah, 79.98. If they reach 79.98, then that would to me confirm that the buyers or professional buyers may be stepping in here, and the dollar should actually rally here. We'll see how far it's going to run into resistance right here at 81.02, and then again here that we already looked at right around that 81.70, we'll call it 81.80, and then again of course would be a retest of the major resistance that it just hasn't been able to get through yet. Alright, so we'll keep an eye on these things. Again, we'll see if the market does rally as it does typically into options expiration Friday here, and we'll see if we then get a sell-off if the S&P can rally around into that 1900, nice round number there. Maybe the DAX, gets close to that DAX nice round 10,000, and then we'll see if we get some selling coming in. Maybe it's just selling back into the consolidation area, or if they break that to the downside, then it might be a little worse. So we'll pick things back up next week, and hope you have a good rest of your trading week, and we'll see you back then.